Welcome back to Pass That Class Econ. This is Dylan Edelman, and we are starting a line of AP Econ videos, the first of which is Real versus Nominal Gross Domestic Product. Here we go. So, I thought it'd be good to have a little refresher about what is GDP in case you forgot. So, GDP is basically just all the goods and services produced within a country's borders in a given amount of time, which is usually a year. And it could include a Toyota factory that's in Nevada. It could include a farm in Nebraska, but it could not include a Ford factory in Japan, because that's produced out of the nation's borders, and that's something called gross national product, which we don't really need to worry about. How is GDP measured? So there are two basic approaches to measure GDP, the first of which is the expenditures approach, C plus I plus G plus NX, which is also referred to as SIGNIX, and all those letters stand for consumer spending plus business investment plus government spending plus net exports. So I want to talk about the second letter there for just a second. So business investment. Investment, that's not an investment like if you or I went out and bought stock in a company. That's investment like a business investment in capital machinery, like in that bottom left picture right there. The second way GDP is measured is the income approach, which is also known as WIRP, wages plus interest plus rent plus profit. So that is just another way to measure GDP. So here's real GDP now. This is where it gets into the whole AP econ thing. So real GDP is GDP that is adjusted for inflation. So how do we do this? So we have a GDP deflator, which is basically equal to the price of a market basket in 1 year over the price of a market basket in a base year. And in case you don't know what a market basket is basically a bundle of goods that the government uses to measure inflation. So, for instance, let's say a bag of popcorn costs $1 in 2015, which would be your base year, and $1.10 in 2016, which would be your current year. So that would be measuring inflation of popcorn from 2015 to 2016. And all of that is multiplied by 100. So, a deflator of 100 is always assigned to the base year. And also, a deflator of 100 means that there is no inflation. So that's just an important note. And finally, here's our equation with the deflator to determine real GDP. Nominal over the deflator equals real. So that's very important. And next is nominal GDP. Nominal GDP is not adjusted for inflation, and it will generally be larger than real GDP because inflation is just the rise in prices. So if it's not adjusted for annual inflation, nominal GDP is going to be a lot higher than real GDP. And remember, nominal GDP is just price times quantity for the entire economy. So if prices are inflated or a lot higher, then price times quantity is going to be a lot higher for nominal GDP. So hopefully you get that. And now we're going to do some calculations practice. So this first one I'm going to do with you, and then the next one I'm going to pause the video and let you try to figure it out on your own. So here's our question. If nominal GDP is $16,430 and the deflator is 106, which means inflation is 6%, then what is real GDP? So here is our answer, and I'll work through it with you. Real GDP is nominal over the deflator times 100, which is 16,430 over 106 times 100, which comes out to be $15,500. So this one's pretty straightforward. Hopefully you get this. Here's our second calculation. If nominal GDP is $19,200 and real GDP is $18,650, what is the deflator? So I'm going to let you try to work through this one on your own, and you might have to do a little bit of algebra and manipulation with our original equation. And I'm going to pause the video and you pause the video and try to figure it out for yourself. Good? You think you got it? Alright, let's see what you got. Here is our answer. Deflator equals nominal over real times 100 equals 19,200 over 18,650 times 100, which gives us a deflator of about 103. That was a rounded answer, by the way. So hopefully you got that. Pretty straightforward again. If you didn't, just rewatch the video. And thank you for listening. This is Dylan Edelman with Pass That Class.